morning. It is Tuesday, June 25th. It's a day, and here's what I want to say about the markets right now. It is boring. It is incredibly boring in this market. You're not making $100,000 a day. You're not making $200,000, $300,000, depending on what your size account of dollars you have in the market. You're not making $40,000, $50,000, $60,000. You're not making $1,000. You're not making money because, again, we've talked about it. We've had this enormous rally in tech stocks. And if you don't think this is true, look at this chart. The 4-hour algorithm got you in on April 24th. That's 2 months ago. You don't have 2 months rallies where it's pretty much straight up other than a little pullback. But you're seeing a pullback now. And this gap between 467 and 471 comes into play. I still think 470 is your support level here, but this gap may get filled. And today, it's looking positive. Don't get too excited. Is it a buy the dip? I don't know. We'll take a look at some of the charts. I've got a lot of news. We're going to go over Bitcoin. We're going to go over the S&P having a $15,000 price target. We're going to go over Bitcoin, NVDA. Hedge funds are selling off. They're looking to buy XLF. Goldman says, hey, there's a major sell-off coming up in SPY, IVV, and VOO. Current weight loss drugs. We'll go over that. Cloudflare. Did you get into Citi? Buffett buys Oxy and it just kills it. It was up 3% yesterday. Sedge is an example. Don't hold your losers. We'll look at that. New Motley Fool stock. I'll look at that. Royal Caribbean hit an all-time high. 3 stocks that are overbought right now. That 2 out of the 3 look like they may be good. Micron earnings, and it's going to be NVIDIA's investor day as well. And we'll go over some social requests and then the scans. Let's look at the Qs. I've said it before. We see a button hook. If you don't know what a button hook is, here on the Daily Stock Pick newsletter, there is an education center. If you go to the website, if you're using the app, it's just dailystockpick.substack.com/education. That's the website. Or it's dailystockpick.substack.com. You can go to it. The newsletter is free, the education portion. If you don't know what a button hook or anything that I mention in here is, sign up for the free 7-day trial. You can read this entire section in probably one day. It is everything that I go over here, and it's everything outlined. I will continually add to the education center section. This weekend, I'm probably going to do an educational email about the fundamental meanings like PE, forward PE, TTM, PE, whatever that all means. I'll go over some of those determining, and I'll put it in the newsletter. But again, we're seeing a button hook, but the algorithm hasn't gotten you out. It very well may get you out. It's not super close, but it's relatively close. It didn't get you out here in May, at the end of May. We're seeing the end of June here. My guess, and I put it in the paid newsletter 2 weeks ago, is that I think we see a sell-off in the end of June, and this is the last week in June. I think we see that setting us up to go higher in July. If you didn't know, July has a 100% win rate for the Qs, going back all the way back to 2007. If you go back, 2007 was the last losing time that we actually lost in the Qs. And the average, the mean change, 4.63. So I'm playing this one out there, and I'm putting it out there for everybody. Is TQQQ probably your buy to go into July? Because then if it's 100% win rate, if I told you that out of the last 16 years, 16 out of 16 were positive on blackjack, everything was red, would you go black? If you'd go black, buy SQQQ. If you'd go red because 16 out of 16 were red, then just buy TQQQ. Again, if you're up 4%, you can make a nice 10% profit, 12% profit, somewhere in that neighborhood. I'd argue that that's a pretty good bet. Now, since we're near the end of the month, and this is the last week in the month, I urge you, look at your quarter-to-date stats and your year-to-date stats. You're 6 months through. It's the end of the second quarter. So you want to look at your portfolio. If you're not beating the Qs, if you're not beating VOO, you probably need to change your portfolio mixture. Make sure that you're tracking this stuff. Because if you're not beating those indexes, A, you've got a story like mine, where I'm in Apple heavily, and Apple is not beating those. I'm close to the S&P, but I'm nowhere close to the Qs. If that's the story, that's okay. It's not bad because Apple has beaten many, many years, and I use it as my savings account. It's just one that I just put money into over the years. I don't put a lot of money into it today. I reinvest my dividends in it today. And reinvesting those dividends, every quarter, it's a couple $1,000. So it adds up to about $10,000 at the end of the year that I'm actually putting into Apple every year. It's not a bad thing. But again, if you're just using that and you have that as your story, and that's the reason you're not beating it, that's fine. But understand where your portfolio is, how you're performing, and where you want to be. Because if you want to be just at the Qs, just buy the Qs and forget about it. That's it. If you just want a data-driven stock portfolio, AlphaPix is probably your pick. You can get $50 off. Go to my link tree, linktr.ee/dailystockpick. And it's the third link. It's AlphaPix. You get it. It's 2 data-driven stocks a month. We're going to get one on the 1st. You get one on the 15th. I'm going to do a video on this one on 5 stocks that have beaten by over 100% since its inception. And it was just started July 1st, 2022. 122%. The S&P, if you bought VOO, you're up 35%. So AlphaPix, fantastic portfolio for you. So if you're not beating the S&P or QQQ and you do want to try and beat them, I would suggest AlphaPix. Now let's look at the Qs again. Where's the support level? I would argue this gap that starts at 471, if we start to fill it, I think you may come down to 460. That's just a guess. Again, these are just guesses. But that MACD has crossed down. The RSI is coming down to realistic territory. It's at 51. It's not oversold yet. So where are we going on the S&P? Well, let's just talk about this. Jim Cramer. NVIDIA is down 12% since Jim Cramer said this. He said, NVIDIA, own it, don't trade it. So far, so good. Yeah. It went under 120 yesterday. We'll talk about NVIDIA a little bit later. But if you didn't watch this weekend, last week tonight with John Oliver on HBO, they have a fantastic Pride Month. It's a ceremony of Jim Cramer saying that he likes bottoms. I mean, let's just say Jim Cramer grabs bottoms. Go and watch. I would urge you to go and watch that one. I'll try and see if I can find a clip of it because the rest of this show may not be your cup of tea, but I really think anybody that's in the market likes that one. Let's talk about Tom Lee. Tom Lee says the S&P 500 may reach 15,000 by 20. This is silly. This is just silliness. That man has become a complete joke in my mind. He called the IWM will be at 3,000, or the small mid caps, the Russell will be at 3,000 by the end of the year. You're at 2,000 right now. You're lucky if you get to over 2,000 because, again, he says, well, depending on a lot of things. He was calling for Bitcoin to be 100K by the end of the year for the last 10 years. For the last 10 years. So at some point, you just become a comic of yourself. And so while it's good that he's had a couple of good calls, I would urge you that the reality of 15,000 by 2030, he does not go over how we get there. He says it's monetary policy. Well, if it's monetary policy, this joker is saying we're going to triple within 5 years. That's not normal. That means the governments of the world are printing more money. Where could that take you? Well, that might be an indication that you want to get into Bitcoin. Bitcoin has rarely dipped below its lower Bollinger Band this year. However, when it does, it's a quick rebound. Will it repeat? I would urge you that if you're not in Trendspider, set up some type of watch list for your favorite ETF on Bitcoin, because there might be a bounce here. And again, that chart kind of points it out. 3.17%. IPIT is up it. You just crossed your 200-day. And again, these things haven't traded very long, so the moving averages are a bit all over the place because you've had this crazy rally over 21 months. The algorithm doesn't make you a lot of money, but it's only 10 positions. And you've had a couple in here, so I haven't really created a strategy. The last one, we had a nice 8% gain. This one, you had a nice 52% gain. So it's not great, but you're looking at just 21 months. So again, this was before the ETF. Remember, the ETF came out here. Before this was trading on the futures. So in January, this was trading on the futures. And then all of a sudden on January 26th, you got that rally in the ETFs when it actually traded a spot price. Now, you can see the RSI super low, down at 28. The MACD down below. I would argue Tom Lee's call is more about going into Bitcoin than it is about the S&P being up there, because Bitcoin is not manipulated. If they're printing more money, more people will start to go into cryptocurrency. I always say this, is that some of your money, whether it's 1%, 2%, you identify your own risk, because your risk tolerance is going to be key in this. Whatever money you put into Bitcoin should just sit there. It can turn into life-changing money. But at this point in time, I would say if you want to trade the ETFs, go ahead and trade the ETFs. Just find a strategy. And if you want a strategy, my 4-hour algorithm might be the strategy. Go over here to Linktree and sign up for Trendspider. Trendspider, you get my 4-hour algorithm. Here's the pricing, $53 a month. It's not bad. If you trade $1,000 worth of Bitcoin and you can't make $53, hey, then your strategy is just not working and you need to work on your trading. But again, it's $53. You can trade these Bitcoin ETFs. You can trade ETFs. You can even trade Bitcoin itself. You can chart all that stuff. It is the best platform for you to actually start trading. I really, really like it. Let's talk about NVDA. Is NVIDIA led tech sell-off signaling coming rotation? This talks about the seeking alpha. The key point here, this isn't a tech bubble all over again, because the firms causing the tech boom are not just speculative wishful thinking. Remember, in the tech boom, I traded in this in the late 1990s, early 2000s. You would put out a website. Pets.com, I think, was a big one. You put and all they didn't even have the website up. They just obtained the URL, pets.com, and then went IPO. That thing was up 1,000% within a week, I remember. It was crazy. You 10 times your money. So I had put $500 into this. I basically got $5,000 by the time it was done. And I just traded out. I didn't wait for it. I was like, 10 times your money, I'm going to get out. It was a crazy, crazy time. This isn't that. NVIDIA is based on actual revenues. Apple is based on actual revenues. Microsoft is based on actual revenues. You have a lot more analysis that goes into these stocks today. You probably can't get something like that. And yet I say, DJT trading up again, but you can't get something like that. So understand, I don't think this is the crazy rally. Now, NVIDIA, the price target was just raised to 150. If we look at this one, it's up 3%, I think. Yeah, 3.11%. You're at 121. Have you put in the support at 120? No. I would argue no. I think that 115 is still your support. 121, we're seeing this cross down. I did say I will add to this week. I will absolutely add to this week. I'm waiting for some type of strength. Now, today, is it the strength? You're at 121. Where's your 9-day? 126. So I still don't see some strength. I'd rather buy this at 130 and see it go to 150 than to buy this at 120 and see it to go to 110. And the reason, I've already got money in this position. So I'm an average of like $300, $400 per share. I'm already in this position at a much lower price. I am looking to up my average share price and add more to this. That's all I'm trying to do. So if you're not in this, I would argue Jim Cramer is right. Just buy it, don't trade it. But if you are in this one, just be a little bit more speculative about what you want to, where you want to buy this. Hedge funds. There was a report out, and this is from Goldman Sachs. Hedge funds keep selling their tech chips while financials get some love. I thought this last line in this one, Goldman derivatives and flows specialist Coleman Corman says in the flat tame, there is 15 billion poised to sell, 622 million of that just in SPY, IVV, and VOO. That's the S&P 500. There's $3 billion to sell up tape, minus $1.6 billion in the S&P, and $36 billion to sell in the down tape. So $36 billion in the down tape, $3 billion in the up tape. I think they're looking at this one being a bit of a rotation from tech for hedge funds. Something you want to look into. Nothing I'm necessarily trading on. Something that I just found interesting. Pfizer, their CEO says the new weight loss drug mechanism is in the works. This headline would make you think, oh my God, I've got to go buy Pfizer. This douchebag I don't trust whatsoever. That douchebag is now a multi-billionaire because he said that the COVID vaccine would cure COVID. It didn't cure COVID. Douchebag, yes, it helped COVID. Trust me, I am triple vaxxed. I am fine. My pronouns are he, him, whatever. But again, I don't trust this man. Now, Pfizer, not a bad buy here. Algorithm loses you 21%. You lose 41% if you actually, bought and held this thing. It has just been, again, a bad stock. Has it found a bottom? Looks like it might have, but your 50-day is still moving negative. Your 200-day still moving negative. This headline would make you think, oh, they're getting into GLP-1. Well, the key point here is the last paragraph. The current weight loss drug blockbusters, Eli Lilly and Novo Nordisk, LLY, which is in the core portfolio, NVO, which is not, but it is a GLP-1 play. They said they're likely to dominate the market even if other drugs are approved, according to analysts speaking during a panel discussion on GLP-1 drugs at the recent Seeking Alpha Investment Summit in New York. That's the key, not this headline. That is the key. Do you want to invest in Pfizer for weight loss? No. Do you want to invest in Lilly? Yes. Get it under 900. Do you want to invest in NVO? Look at Lilly's stock. Okay, algorithm got you in at 735. Don't you wish you got in there? Because again, this is just a once in a lifetime for Lilly. We can go over here and we can look at Lilly. The valuation is the only thing that's crazy. But the growth on Lilly, it overcomes the valuation because we can go and look at the valuation. It is a hold in the quant. But I would argue if you're getting into GLP-1, this is the one you want. They have Alzheimer's and GLP-1. You've got a peg, the forward peg, at 7% below the sector. Now we can go and look at the weekly chart. We talk about charts going from bottom left to upper right is what you want, not the upper left to bottom right. This is a stock that you want. Algorithm makes you 123%. You're in it since 700. It hasn't gotten you out. That's a legendary one, legendary run. Now NVO is one that you want too. Again, you take your winner. I'm not saying, hey, put all your money into these things. If I had to pick one, it would be Eli Lilly over Novo Nordisk. Now, Novo Nordisk just said they're going to build a new plant that's going to produce more of their Wegovy. Again, your support is 132, you're 142. This one's not taking off just like Eli Lilly is, and I think it's because Lilly just has the benefit. Now, this one, when you look at the weekly, huge. When you go over here and you look at NVO, it's the same. It's a hold in the quant. The valuation is an F. The PE is 49. The forward PE is 41. The PEG, though, is 2. It's above. So when you look at Eli Lilly, their PE is 122. The forward PE is 64. So you are paying more. But I think they're growing more. The growth year over year, up 29% in revenues. Profitability, they have an 80% profit margin. NVO, they have a 84% profit margin. They're growing by 29%. Coin toss. I mean, again, coin toss, just in my mind, I think Lilly has a better slew of drugs. That's my overall look at it. And am I an expert on this? No. Am I buying Pfizer? No. I just don't trust this douchebag. That's it. I mean, again, we talk about it all the time. Good companies with good management, with good products, with good profits. And that's it. And I don't trust his management skills. So Cloudflare rises after UBS upgrades. Is this a good buy? Cloudflare had a recent turn down. If we go and we look at this one, I think it was based on earnings or something. You're seeing it be kind of, since February, it's kind of weak. Quant has it as a strong buy, and it's because of the growth. The valuation is not crazy. The valuation, high PE, but the peg going forward, it's pretty good. When you look at Wall Street, average price target, 88, which indicates an upside of 10%. Now you can see back here in 2021, this had a $215 price target. It's a strong buy in the quant. This was an interesting article. I think if you're interested in Cloudflare, again, they point out why they got into it. Now we can look at Citigroup yesterday. We talked about Citi being a good buy. Banks did really well yesterday. Banks did well. You're up above 60. You're at $60.95. I don't think that's a bad buy. Algorithm got you in at $60.45. The MACD is down. I think financials are going to be fine. Oh, look at this. Carnival is up 3%. We can go look at Royal Caribbean. We're going to look at the Royal Caribbean in a little bit. We closed yet another quarter delivering records, this time across revenues, operating income, customer deposits, booking levels, exceeding our guidance in every measure. Based on continued strong demand in travel, we are taking up our expectations for this year, and net yields now forecasting to top 10%. If that doesn't tell you that cruising's back and Carnival's up, that's a good thing. Again, I think the economy's strong. Citibank, this is the lowest book value. If you didn't get into this one, I don't think it's too late. If we go and we look at this one, you can see this one from a standpoint of, hey, we're about to get the golden cross on the weekly. It's already crossed the 200-day. I think you're putting in at least 70 in this one. So do you want to get into this one? Let's say you don't know which stocks to get into. On the weekend, I put out this free screener on FinViz. So if you're a subscriber, you can get it. These are large cap companies that are up on the week, but trading 10% below their 50-day SMA. This is a simple scan that you can do in FinViz just to find some stocks that you may want to trade. Simple. And it's 9 stocks right now. Changes every day. If you want this screener, just email me or send me something. I'll send it to you. It's on FinViz, so it's free. But Citi is a good one. One other one that I've told you about that we had a buy on, Oxy. Remember when I said, hey, you want to buy Oxy under 60 and sell it when it's over? Yeah, $60.31. You're at 62. You're just crossing the 200-day. Your 50 days turning around positive. You will probably spike here to 67 or 68 again. The RSI got incredibly high. The MACD is still rising. You have confirmation. You're trading at the top of the Bollinger Bands. You can see the Bollinger Bands cinched up right here at about 60, and it took off. Use your indicators as best you can. Now, one that I want to point out, we talk about this all the time, is don't hold on to your losers. Sedge is one that I got out of at around, I think 90, maybe 70, but I may have gotten out at 90. I'm not quite sure because I just don't check this one. They lost again. They're down 17% because they diluted shareholders and they told them we don't expect to make a profit at all. Look, this is one that it was clear. Get rid of your losers. Don't hold on to something just because you want to. This started falling at $279. I bought this at $270. Did I wait? Yes. I should have gotten out way here. It was the second earnings that they did where it was down here and it was trading between $78 and $60. I'm glad I got out at 78 or 60. I didn't hold on thinking, oh God, it's going to come back. It was trading up here. The valuation and the story changed. Do not hold on to your losers when the valuation and the story changes. You want to get rid of that. Now, one that is an interesting one, ONON. I've been saying, hey, this one was a buy at 30. All of a sudden, Motley Fool comes out yesterday. Buy on holding. Buy growth is afoot. The thesis, the founder-led company is a small but fierce competitor in athletic footwear. We do have Nike earnings later this week. A high-tech approach to creating sensation of running on clouds has fueled its growth to date. Timely investment in automation, global expansion should keep revenue improvement paced at a double-digit annualized revenue. They go over it in a video. Again, I'm not a huge fan. In fact, if you weren't on live, I couldn't find the damn login to Motley Fool. That's why I like Seeking Alpha. That's why I like Alpha Picks. Seeking Alpha is significantly better. See Seeking Alpha's website? You have up here in the upper right-hand corner. You can log in the upper right-hand corner. I don't like Motley Fool at all. I don't like them at all. But I have a subscription through my dad. We use it. We both use it. It gets you. I put some of this stuff in. ONON is one that is an interesting one. I think you should buy it now? Probably not. Let's see. ONON is up. On Holdings is what it's called. It's as simple as ONON. It's down 1%. You got a weakness here. They're a bit too late in this one. I mean, this is the first time they're covering it. And look, we've been covering it since it was in its 20s. I mean, yeah, again, 35, I think, is a good support level because old resistance turns into new support. Look at that resistance. You hit it once, you hit it twice, you hit it 3 times, and it pulled back. Now, this should provide some support. It's long enough and high enough over that $35, $34.50, say, that it should provide some support. Your RSI extended. It's at 58. Your MACD, a little bit high. This is a weekly chart. So again, you want to look at that weekly chart. Now, if we look at the 4-hour chart, you're seeing some weakness. You're on the downside. The 9 days moving down, but your 50 days still moving positive. Your 200 days still moving positive. You got this gap here between 30 and 33. That's its last earnings gap. My guess is that you'd probably come down again. That 34.50 should provide some type of support. If it doesn't, expect it to come down to 30. Look at your technicals here. That's what you want to do. You want to find your thesis. You want to find your suggestion, and then go over to your charts and look at the technicals. That's the way I do things. But again, don't hold on to your losers. Look for new ones. Now, Royal Caribbean, this is one that's an alpha pick. I think I can say it's an alpha pick. I think it was February, so it's been 3 months. They're on my ass about not promoting which ones are. Algorithm says buy at 154. We said it yesterday. The MACD was down. The RSI was down. You're up 1.95%. It is going probably more towards 160 than it is back to 150. With Carnival coming out with their huge things. Again, you have earnings later in July on this one. They just hired 10,000 employees. They have like 10 new ships going in. This is a significant stock. Interesting. 3 overbought stocks that I saw yesterday. First one is TJX. This one, my notes are wait for a pullback, but if it's on your list with retailers having too much inventory, TJ Maxx will buy it up and sell it. I like this one for retail. This one has been a huge winner. We can go over here to Seeking Alpha and we can type in TJ Maxx. TJX is the symbol, and it's a hold from the quant, and the reason is the valuation and growth. The valuation, it is a high PE, yes. PEG, trailing 12 months, it's a little bit high. Even the forward. The reason the forward PEG is not good is because of the growth. It's extended. Growth, they're growing 9% year over year. Now, earnings per share forward for the 3 to 5 year term, they're only growing 8%. So are they going down? I don't know. I would argue that it's a little bit stretched, but when you go over and you look at Wall Street's price target is 113. You're trading at 111. I would wait for a pullback. The pullback on this one, when it does happen, I would probably add around 100 because 113, the value of 113 is not bad for your back to school. Gap just got an upgrade because of back to school. If you don't think TJ Maxx is going to be back to school winner, you're crazy. Costco, Walmart, back to school winners. And that's the next one we're going to look at, Walmart. Because if you look at this one on a daily basis, look at that RSI. And that's what I was looking at, is what makes an RSI at 80 and what makes someone want to buy it. That's what I was looking at. Look at that daily on TJX. The MACD super high, but I would argue this is a bottom left to upper right looking stock. Look. And we identified before 94 was the support level, and it broke right through it. Now, your support level right now is about 100. As it pulls back, I would say buy it. Walmart. I like this one. They have gained market share in the higher end consumer. It's cheaper than Costco, and they have the advertised business with a huge cost cutting mechanism with AI. Now, the CFO just came out today and they said, hey, our next quarter won't be as good as this quarter. There will be a few quarters going forward that are as good as this last quarter. Look at this last quarter. Look at how many people bought this stock. Look at that MACD. Huge, huge. Look at the gap between 59 and 62. Now the RSI, if we go to the daily, the RSI from yesterday is extended. You're way up here at 70. You're coming down to 60. It's getting that little button hook. You've got this earnings gap right there. You are on the upside of this trend line. So, but do you want to buy it? I would argue yes. If we go over here to Walmart and we look at the quant has it as a whole, valuation and growth, those are the issues, I should say. The peg, the trailing 12 months, great, 47% below. The forward gap peg is 66% above, and it's got to do with growth. You're 5% above. Again, these guys don't blow it out of the water. Their main business is groceries, but they're in the advertising business. They're taking market share from Amazon Prime. They're doing everything with e-commerce. It is a really, really good business. And I would argue that this is the one that you want to own. Walmart and Costco, the two that you want to own. When we go to Walmart and we look at the valuation, and let's just take it PE wise. So the forward PE is 28 on Walmart. If we go and we look at the forward PE on Costco, let's go. Costco is number 2, by the way, in the super retail group. But if we go and look at the forward PE on Costco, it's 52. Walmart just is a better buy. Again, if you want these two, the reason to hold Costco is because I think they have a membership increase coming at some point in time. And I'd say it's sometime this year. And I think it's a $900 stock when that happens. Wall Street says it's a buy. Average price target, $839. That's 1% down below where you are at. They're just going to take the price target higher. So Walmart, I would say, is an oversold stock that on a pullback, you want to add to it. How are you going to add to it? Well, maybe it's the 4-hour algorithm, because the 4-hour algorithm has provided me fantastic entries on this one over the year. Now, it got you in at 63 or at 67. That's not a great, your average win on this one is 6%. It's not going to kill it like a tech stock. Now, one that I would not be adding to that's oversold is Expedia, EXPE. Stay away from this one. Travel here in the U.S. is a bit stretched. Booking Holdings, which is BK, has the Europe, and that's the better play. Look at this one on a daily. On a daily, this one is at, let's see, $70, 70 on the RSI. Now, on the 4-hour, you've got this gap up here, this gap on earnings, which was a gap down, and you've got this buy in here at 114. I would say wait for a pullback on this one because your 50-day is moving positive. Wait for a pullback and then buy this one because I do think that you get this gap fill. It's currently filling this gap up to 134. You're at 129. But wait for a pullback. It's just too extended. But I wanted to put that one in because it's a good opportunity. Now, Gene Munster has his take on Micron. This is a big week for AI investors given Micron reports on Wednesday. This will be the most important AI data point until big tech reports late in July. NVIDIA late in August will report because Micron and NVIDIA work together on HBM. While it's hard to predict what the stock will do, I believe the takeaway from Micron's earnings will be the AI trade is intact because the company's revenue growth for full year 2025 will likely be increased from the current 50% growth. I've said it. Micron, I think, is a bit extended. I would not trade this one before earnings. But if after earnings, all of a sudden we bump up over 150, it's off to the races. I'd rather put my money into NVIDIA thinking that it's going to pump up if Micron kills it on earnings. That's the way I would play this one. Now, NVIDIA is coming back down to 120. It's up 2.4%. We're seeing some pullback in the market. Again, the Qs, it's just seeking, it's trying to find its footing. That's all it's trying to find. Social request. Jacob, Gary, your thoughts on HBAN lately? Let's see, HBAN. Because Jacob does do a little bit of analysis. This is Huntington Bank shares. Seems like the MACD and RSI are poised to pop the stock higher, and I think it's a button hook right. Question mark. I am curious why all the downgrades lately, though. I think this should be a $15 to $16 stock. Great dividend. Is this a good buy the dip opportunity? Hold long term. Okay. It's a small bank. Let's see. HBAN. AN. There we go. Let's look at this one. They are, so they have a market cap of, I'm waiting for it, $18 billion. Not huge, not small. But let's see the seasonality. Looks like it's coming up into pretty good July, 80%. 10-year average, 4.3%. So maybe it's going to see a bounce. We're seeing 21 analysts over the last 90 days, 1 sell, 7 hold, 4 buy. It's a buy at 4.0 as banking holding company for the Huntington National Bank that provides commercial consumers. So it's a bank. It's a regional bank. You've got some issues with regional bank. Here's the annual revenue. That's not bad. Earnings per share kind of going down. Expectations are for it to go up on the next earnings. You can see 13 full year revisions down. Earnings revisions only 4 up. Growth, they're losing 5%. I mean, here's one of the things I know about regional banks, and I'm not an expert whatsoever. But one thing about regional banks is they got long-term, low yielding bonds. So the way a bank works is they loan out the money and they get interest from the loan. But they also have to pay the interest, and their holdings actually make treasury money. So you want to hire today when bonds are at 7%, they have to pay 5% interest out on savings, but they're only making 2% on their treasury bonds because they were bought when they were like 0% and 2% and 1%. So again, they're not making any money on those treasury bonds, and they have to pay out the interest. So that's where the banking crisis comes in from my dummy overview. Now, when you look at the price target, it's 18% above. We can go and look at FinViz when those came in, but let's look at the chart real quick because, you mentioned RSI and MACD. They do look like, here, the algorithm got you in at $12.43. Nice little bounce there. Algorithm makes you 25% versus 8.6. So Jacob, hopefully you have the 4-hour algorithm in Trendspider. I would say that the MACD, the RSI coming up, this was a great buy. I mean, let's be honest. Down here at 11, if you saw this, let's go look at the book value, HBAN, because I do want to see on FinViz the book value of this bank. Book value is 1168. So you're trading above your book value. Citibank is at 9. Their book value is 90. They're trading at 60. There's reasons for that. PE is 11. That's not crazy. Your year to date, you're up 2%. Again, your average price target is 15.24, so it's upside. When you look at that, you can take that upgrade, that price target to the bank because everybody's saying upgrade this year. Now, the one downgrade came June 14th from Piper Sandler. They brought it down to $11.50. Where are you trading at? You're trading at $12.99. So if you believe them, that's the one that you want to look at. But again, if you look at this one, I don't think it's horrible. I just think when you look at it, you see that dip in the stock price. When you start to see that, it looks like it trades down. So I'd be a little bit nervous of that one. But I also think that, I think that the banks are going to come back. So Jacob, I don't think it's a bad one. I just think that, again, if you're interested in regional banks, you might have some upwards and downside. I don't know what their exposure is to commercial banking, commercial real estate. That's where you really have to do it, but they're taking it down. Try and take a look at it. If you go over here to FinViz and you click on that Piper Sandler one, I don't think FinViz takes it doesn't take you to the specific one, but it was June 14th. Just look at the here. Analysts just slash price targets for these 2 dividend stocks. Time to consider Benzinga. Benzinga probably puts in something. You can go to Seeking Alpha and look on the 14th. They probably have a news article on it. But I don't know if I can tell you exactly, but I do think that 1243 was a great buy, and I do think you're probably coming up to fill this gap at 13. So, Sean, hello, I have a friend. These are both emails, by the way. Both social requests came in email. You can email me. You can comment on the Spotify. You can do whatever you want. Just make sure that I get it. Hey, Gary, this is from Sean. Asking for a friend. Friend's name is Tony. I have a friend at work whose wife was gifted Ecolab at around $20 a share. Let's see, Ecolab. He didn't include the Ecolab. There it is, ECL. For around $20 a share. They now have 40,000 from it now. He wants to sell and get into some S&P ETFs or have it actively managed. She doesn't want to touch the stock. What kind of long-term upside do you feel Ecolab has versus something like VOO or Pay for the account to be managed? So Ecolab, I don't know anything about it. Algorithm makes you 35%. Buying and holding makes you 66%. That buying and holding tells me it is a bottom left to upper right. So it's doing well. I mean, you just had the golden cross. You just had, you just crossed your all-time high, it looks like. Let's take it back a little bit. Yeah, I mean, even if we look at the monthly, Ecolab looks like it's killing it. Let's see the monthly here. Yeah. I mean, it looks like it's topping at about 240. So it's got to make all-time highs there at about 240. ECL, if we look at it here in Seeking Alpha, let's see ECL. It's got valuation is an F, but that's usually with high flyers. I mean, 1 year you're up 34%. Year to date you're up 22%. What do they do? Let's see. Provides water, hygiene, and infection prevention solutions and services in the United States, internationally, blah, blah, blah. It's water treatment stuff. Valuation is an F. And let's see. Their PEG. I mean, I'd be a little bit nervous at this one being around 242 because, again, if we go to this, you can see the 52 range is up to 245. When you go to Wall Street, their price target is 241. So I would actively be trimming this because you're at that all-time high kind of thing and you're at the price targets. Now, over the last 90 days, 26 analysts in the last 90 days, 18 say hold, 4 say buy, and 4 say strong buy. So my guess is, and Sean, I would point Tony towards risk tolerance. Nobody can tell another person what to do. If they're nervous, if they're losing sleep at night, move half that money over to a VOO or a QQQ. Whatever you determine is the best one. I'm a believer that with an actively managed account to pay for 2%, they better be beating VOO. Because if you're paying 2% to a fund manager to actually lose you money over time, VOO has a 0.03% expense rate. That's the way I would do it. And so I don't think you tell somebody, hey, it's a good idea to have it actively managed. Ask them what their 10-year average is against the S&P if you actively manage them. Again, Fidelity will give me that information. And they, there's not many people over 10 years that can actively beat the S&P. But if you have a fund manager that does, have at it. If the dollar amount makes sense, because again, actively managed just means that they're going to actively manage it. If they can beat it over, it's worth the 2%. If they can't, it's not. If they're charging you 1% and they beat the S&P by 1%, I'd say it's just better to not risk it and go VOO. But again, on the downside, and this is what you have to learn, is that Trendspider is not just good on the upside. It's good on the downside. It protects you. If you take a look at like QQQ, we just take a look at this. Well, if I'm starting to lose sleep because QQQ went all the way up to 488, 486 at its high, and all of a sudden I'm losing sleep because it's at 476, then that tells me, hey, Gary's algorithm says maybe I'm going to get out. You can go down and look at the algorithm where the exit and entry are, try and understand that, and just take a look, and you can try and anticipate when to get out. Again, you could even say, hey, if the candle's lower, then set up a 5% stop loss. from there. And you can set Trendspider up to do that kind of stuff. So understand that Trendspider is not just a tool to make you money. It's also a tool to save you money and manage your portfolio. It's really, really good at that stuff because, again, you can set up stop losses and you can set the alerts so that you get a text in the middle of the day. And it says, hey, you may want to think about selling this. Then you go into your app, wherever you're at. I'm out hiking half the time, and I just go into the app and I sell it. So, again, think about the tools that you have. But Ecolab, I think it's a good one. I just be worried about that one bumping up against those all-time highs and the analysts kind of thinking, hey, again, analysts do this for a job. They have models. They have things that we don't even look at. I don't care to go into that kind of detail for the majority of stocks. I just care to think about the story, the management, the profits, everything like that, and then make my determination on the charts. And that's it. Scans. We have a couple of scans. I do think that healthcare is one that may come back. And we talk about United Healthcare all the time. This one has a buy. It's at 490. And it's trading at 488. I honestly say this, that the closer it gets to 450, the more you can buy. We have this gap that hasn't been covered down here. It's a gap up from 464 to 449. We have that gap, and it's based on earnings. It's a gap up. We haven't covered that portion of the gap. So do I think that you should buy 488? I say this a lot. I think it's a $500 stock. So buying at 488, will you go down to 450? Maybe, but you add more and then you can sell it off at 500. I think it's a $500 stock. So another one that's been doing well, and we can talk about it, is Coke. Coke's at 63. This is a defensive stock. And I think, healthcare, energy, healthcare, utilities, I think they're all, defensive stocks. So if the consumer's weakening, energy, you're going to have to pay for all these data centers. Energy is a great play. You look at, Exxon. But Coke has a buy-in here at 63. Do I think you should buy it? No. I think your high there at 64 is your cap. And I think you'll come down below 60. But it has a buy-in here. ITB. This is the home builders. I think real estate's going to get a second leg here. For the first time over the weekend, mortgage rates dipped under 7%. So this has been super weak. I bought, I think, at 105 back here in April. I think I bought at 105. It went up nicely to about 111. Did I sell? No. This is a long-term buy and hold. So I'm just adding to my position. I'll probably add at 103. It's so far it's a small position. I'm just adding it. These ETFs, I don't go balls deep. I don't go balls deep all at once. That's crazy. That's just crazy. Go balls deep. Let's see. Ulta. Has Ulta found a bottom? Well, when we look at Ulta, it has a cross up here. It has been seesawing up and down between a pretty good range of 377 and 400. Well, I think you could buy it at 387, and I think it gets to 400 at some point in time. The valuation on this one is not nuts. You can clearly see if we just put a 380, if we just go to 380 right here, and we put that line in, boy, that's a pretty good support level right there. You can see the resistance back here in 2022. You can see the support back here in 2022. It turned into support. And boy, did it bounce off there in October, and it came all the way back down. And look, over the last 4 or 5 weeks, you've been sitting there at 380. You're trading at 387 right now. Not crazy. Not crazy to think that this is going to be a support level. This was where it was trading. It was trading at 360 before the pandemic. Before the pandemic, this was trading at 360. So, I'm sorry. Yeah, August. No, before the pandemic, it was trading at 300. But it was trading at 360 in 2019. Not a crazy one. You look at the MACD, it's kind of, I think Ulta is positioned well to continue. And again, no to short term, wait for the long term. So, again, we're looking at that double top around 552. Is it extended? I don't think so. I mean, we can look at this is how you look at stocks. You use your chart and you use your stuff. Now, the momentum sucks. The valuation, not great. But the profitability, this is a hugely profitable business. The valuation, it's a little bit extended, but their peg's 18% below the industry average. Growth, 7% year over year. The average is growing at 7%, at 2%. Now, ELF is one that has just exploded. And, I made the decision to buy Ulta. It was the wrong decision. I think I'm in at about 400 or so. But, Alpha is one that has an A. It has, it has all the momentum with it. The revisions now are a little bit suspect. 5 up, 9 down, 13 up on revenues, 2 down. But there's a whole list. 2 that I want to go over specifically are the spider sectors. XLC. This is the communication sector, and we can take a look at this. This one has a swing. If we go and we look at the weekly on this one, I wanted to show you how far we came down in 2022 and how far we're going up. Now, the top in this one was trading here, the highs at 86. 86 was the high. Where are you trading right now? 85. So your double top is going to be at 86. Your MACD is extended. Your RSI extended at 74. If we go over to Seeking Alpha and we look at XLC, and we're going to look at the summary, what I want to look at is what's in this ETF. Well, number 1, Meta. Number 2, Alphabet. Number 3, Alphabet. So you got the 2 alphabets right there at 12 and 14%, then Netflix, then T-Mobile, Electronic Arts. This is a good ETF. It only has 23 positions. And 22% is Meta. So what would I want to do? I would probably want to buy Meta, but I'd be worried about it bouncing up against this highs. Meta under 500 is a great buy. At 505, just add to it. Now, XLU is a completely different story. These are utilities. Somebody's going to have to power all of those data centers. Somebody's going to have to pay for the air conditioning over the summer. My bill just went up 40, 60%, something like that since a previous month. May was a decent month here. June has just been hot as F and dry as F. So utilities, I think they get a bounce here. I think you may be looking at 72. If we look at the weekly on this one, you can see we are simply in the 50-day starting to move up. Do we see this bounce up here? I think we do. Now, XLU, you can go and look at XLU. What are the holdings on XLU? Let's look at XLU. And let's go to look at the holdings. Because you have 32. Number 1, NextEra Energy. This is NEE. Yeah, NEE. We can go look at the chart of NEE because this one has been decent one, I think. I think they got taken down. But you're seeing it cross up. On the weekly, you're seeing it cross up on the 200-day. See, $72. $72. It was just a couple of days ago. The MACD, super low. The RSI, super low. You're 72.70 today. It's trading a little bit sideways. You got a nice little gap up here. The last buy got you out with a 16% gain. If we go and look at the weekly on NXEE, you hit the 200-day and you pulled back. Now you're under the 200-day. The 50-day is starting to turn positive. NextEra Energy, if we go and look at this one, again, that's 14% of this entire ETF. The valuation's the only thing. The valuation, it's a little bit extended. Not crazy extended. 22 is the PE. That's a little bit extended. The revisions, 5 up, 4 down on earnings per share, 3 up, 7 down on revenues. Now, when do they report next time? They report, it looks like July 22nd. How'd they do on their last one? They jumped from 62 all the way up to 80. So I would expect them to continue to actually, beat their earnings. So again, all of these kind of go into, that's kind of a look. All of this stuff will be in the newsletter. If you have any questions, hit me up. Remember, Trendspider is on sale, $53 a month. It's not just about finding a place to buy. It's about finding a place to actually sell as well. So don't think of the $53 as, I've got to make $53. Think of the $53 as if I save money on the Qs, then the $53 makes sense. Because if you save money on the Qs, again, if you just put your stop losses in and you say, hey, alert me when the Qs pulls back by 5%, then maybe that's a good thing for you. Maybe that's the way you want to protect your upside, by using the algorithm to get in, but then protect your upside by getting your stop losses in. Maybe that's something you want to do. And again, for $53 a month, that's not bad. Now, let's talk about fundamentals. If you want to, look up the holdings and all of that stuff and the quant ratings on everything, just sign up for Seeking Alpha. You can get a free account It's a free 7-day trial if you sign up, though. I mean, see if you use it. If you don't use it, just cancel after 7 days. My newsletter has a free 7-day trial, too. So if you think you're going to use it, you can read the entire paid section in probably 7 days. I'm not offended if you disconnect. I just look for people to support me on that stuff because I do this podcast for free. So if you have any questions, hit me up. I will talk to you guys tomorrow. Okay, take care. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.